Welcome back. Infosys has just reported the Q1 numbers and the headline is that there is a guidance upgrade. The FY25 revenue guidance has increased from 1 to 3% to 3 to 4%. Awaiting the Q1 details, but needless to say, it will be a big, a positive surprise compared to what the street was anticipating, which explains this kind of a guidance upgrade. So FY25 revenue growth outlook for Infosys has been raised to 3 to 4% from 1 to 3%. And I think Infi would now be, we've got the margin number at 21.1%. It's a good 40 basis points ahead of what the street was anticipating. So margins have beaten street expectation and they've expanded by 100 basis points.
Constant currency revenue for the reporting quarter is 3.6%. Quarter-on-quarter, and that's a lot higher than I think the 2.2 was the expectation, right?
About 2.5% was the expectation, but there was no one on the street who was anticipating a number above 3%.
3.6%.
So this has actually come in as a big positive surprise, and it can't just be execution of previously won deals.
So 4.1 billion are the large deals, the TCV for the quarter reported is what they're talking about. And like you said, the guidance increases also come through. I'm just trying to open the fact sheet to look at the breakup in terms of the geographies. If we talk about the number of active clients, June quarter ending June 30th, the total number of clients is 1867, which compares with 1882. So the total number of active clients has actually gone down, but perhaps they've added some more in the top level. So yeah, the contribution from the top 5 clients is very steady at about 13.5%. That hasn't changed too much. Let's look at the industry segments. Yeah, so here we've got the growth numbers coming in. Revenue by business segment. That's okay. Yeah, no, I'm not getting. Yeah, the constant currency growth, but this is a year-on-year. Financial services, there is some growth. 0.3% is what they're talking about. Retail has shown a contraction. There's growth in the communications vertical, 5.4%. There's growth in energy and utilities. Actually, all the verticals are showing growth. Manufacturing is up. High tech, almost all of them. Life sciences, all of them, barring retail, are showing constant currency growth. So verticals seem to be not too bad.
We'll have to wait for the quarter-on-quarter performance in revenues. What you spoke about is the year-on-year.
Is a year-on-year, yeah.
Is the year-on-year. So we'll need to get into the nitty-gritties of it. But this is an excellent start to the year. And even the number of deal wins at $4.1 billion, it's largely comparable to what the company last quarter, it was $4.5 billion. This quarter, it stands at $4.1 billion. And 57% of these are net new. So deal wins are intact. There is a big beat in the company's revenues, 3.6% constant currency revenue growth, ahead of street expectations of 2.5%. And this is on top of the pack. Just to put the numbers in context, LTI Mindtree was at 2.6%, TCS was at 2.2%, and HCL Tech was an expected decline. So Infosys has come in at 3.6%. It's ahead of the peer set. Secondly, there is a solid margin expansion of 100 basis points. So margins have come in at 21.2%. 21.1%, which compares with 20.1%. So beat on revenues, a beat on margins. Even the cash flow is the best ever. They've managed to sustain strong deal wins at $4.1 billion, which compares with $4.5 billion in the prior quarter. Big revenue guidance upgrade at 3 to 4%. The guidance to begin with was considered fairly conservative. And after this Q1 beat, I suspect the asking rate for Q2 to Q4 also should not be very high. The margin guidance has sustained at 20 to 22%. So
I've got a quote now from Salil Parekh. He's saying, with a focused approach for generative AI for enterprises working with their data sets on a cloud foundation, we have strong traction with our clients. And then he's talking about Topaz, Cobalt, and some of their other capabilities. I'm not getting very specific line on whether the demand environment is changing or not. They're saying that a lot of it is a testimony to Infosys' own differentiated offerings.
In Q4, when the numbers were very weak, also his press release read a very similar number.
Yeah.
Like, our differentiated offerings.
Exactly. It's not telling us about the real demand environment.
It doesn't, that quote plate that you were reading, even I had a look. But even in Q4, it doesn't say that, oh, things are bad, this is what happened to us. So there's not much to glean from it.
We have to wait for maybe the
we'll have to wait for the press conference to find out more about the demand situation. But this is come in as was a big beat. Prakash Diwan is now with us on the phone line. Prakash, these numbers, do they explain the rally that we've already seen? So Moshe Khatri is also with us. Do they explain the kind of surge that we've seen in the stock price so far, or does it warrant for a further re-rating?
So, Riva, very clearly these numbers are far better than what all of us had anticipated. Particularly the constant currency growth is stupendous in this environment, particularly. And especially when you know that the likes of TCS and HCL have been struggling. Now, if you look at the stock, the change in the stock price in recent months, it's kind of played a bit of catch-up, but I think these numbers definitely propel much more re-rating. And of course, it has to be corroborated by the press conference, once the management gives us an indication that this is going to continue. So very, very positive. In spite of the number of active clients that Sudhir was reading out, if these are the numbers, then you know the quality of the mix of contracts from clients has gone up. So let's look at that. And if they maintain that 4 billion plus kind of zone on the TCVs, then you at least know that the next 2-3 quarters execution will also be very promising.
Moshe Khatri is also with us. Moshe, the screen was telling you that there is optimism going into the numbers. What have you picked up from the investor sentiment after TCS, HCL Tech? And what are your key takeaways from Infosys right now?
Well, you have to remember that we started this earnings season with some skepticism on the investor side about that recovery for the second half. And on top of that, you've had this irrational kind of discrepancy between booking growth that's been pretty robust during the past 12 to 18 months versus what we've seen in terms of revenue growth. So you had that disparity. And on top of that, you've had some skepticism that the industry is going to be able to grow given the concerns over the disruptive nature of Gen AI. So here you go. You had TCS coming out with better than expected results. They did indicate, we did hear obviously before the quarter that some of those large deals are starting to convert in a better pace. And I think now it seems that you've had probably the best scenario coming through. TCV numbers look pretty good, very healthy sequential growth, as he said. The margins look better than expected. They did raise guidance. So the real question now is whether this is predominantly a function of those deals ramping, or there's also an uptick in discretionary spending. We're not seeing that latter part yet, but that remains to be seen in terms of whether management talks about this during their media call or their analyst earnings call later on. But again, you've had a pretty skeptic investor base before earnings, and at this point, you've seen a lot of those issues kind of being addressed with better than expected results, and that's a big deal.
I get that there were a lot of skeptics, Moshe, prior to the numbers, but after what we heard from TCS and HCL Tech, did you see buyers come in? Or are they still waiting for more evidence? And does Infosys provide the evidence that you need to go out there, for investors to go out there and buy?
Well, as you know, the uptick in those stocks or the multiple expansion isn't necessarily predicated on just buying. Maybe it's also short covering. So that's probably the other force that's kind of resulting or driving the multiple expansion that you're seeing here. And on top of that, obviously the street has been taking numbers higher for the next few quarters. You've had a street that had a lot of euphoria 6, 7, 8 months ago about this industry, and then you've had disappointing results at the beginning of the year, and then you had a sentiment that shifted about 180 degrees. And now we're kind of back to where we were probably at the beginning of the year in terms of better than expected result for the second half. So it's probably buying, and it's also short covering on the other side as well.
So as you said, Moshe, 3-4 quarters back also there was optimism going into the IT earnings. Do you think this time it will flatter to deceive, or on the ground when you speak, you do your client checks, you speak to enterprises to gauge the demand? Is there recovery on the ground, irrespective of what the management may say about discretionary spending coming back? What is your own view?
The recovery, I would say, is predominantly on the deal side, the deal conversion side of the business. The discretionary spending recovery, maybe you're seeing some bottoming. I'm not seeing anything significant that will get me to come out and say, hey, we're kind of out of the woods at this point. I don't think we're there yet.
What would be the key things that you would want to hear from the management? What are investors looking out for? One, you said, is there any element of a discretionary demand pickup? What else?
Gen AI bookings. It'll be interesting to kind of get a feel on where we are. It'll be interesting to kind of get a feel on what are the use cases here. Are we really picking up scale in terms of those bookings? At this point, bookings haven't, I mean, they've been growing out of a very strong base, but we're not seeing that really significant pickup there. So it'll be interesting to hear about that. Any sort of kind of use cases where we've seen revenues being cannibalized because of Gen AI. Again, this is an ongoing concern for investors, whether it's impacting the testing part of the business, the managed services piece. Investors are still not fully convinced that Gen AI is going to be, additive to revenue growth. I think there's still a lot of concerns about Gen AI's impact in terms of revenue cannibalization. So we'll be interesting to see what management says about that. Revenue growth in terms of, connection, or how does it kind of correlate with headcount growth? Are we going to see a decoupling there? That'll be important. And then headcount hiring. Are we going to see that pickup or not?
For this quarter, Infosys headcount has declined by 1,900. This marks the 6th consecutive quarter where the overall employee base of Infosys has shrunk. And in the last 6 quarters, their employee base has come down by 31,500. So we saw some increase in TCS's hiring in the current quarter, but for Infosys, the employment, the overall headcount continues to come under pressure. The company is perhaps, attrition has been stable at 12.7%, but the overall headcount is down for the 6th consecutive quarter. Prakash, anything more that you've picked up on Infosys numbers that you'd like to highlight?
So, Rima, to add to the question that you had earlier in terms of how does the investor sentiment change after this set of numbers, I think if you look at the change in P multiples that we saw recently, the enhancement of the P multiple, that probably will get a bit mitigated with the EPS estimates going up significantly now that you have a 3 to 4% guidance, which is significantly better than what everybody penciled in. I mean, we had estimates which were on the 1-3% band. So this will change. Headcount coming down is a sign of probably better utilization levels. And I think they are at a different stage of the cycle, the hiring cycle, and we could probably see hiring big aggressively. All in all, the momentum continues back. It also follows what do you put money to in the next.
Okay. Prakash, got you on a bit of a scratchy line, but thank you very much for joining in. Moshe, you too, for your early insight. The press conference is scheduled at, I think, 4:30 p.m. We will be on it, and we'll get you what the management has to say. Q1, to quickly wrap up, Infosys has clocked in a blockbuster quarter, beat on all parameters, revenues, margins, revenue growth ahead of peers at 3.6% on a quarter-on-quarter basis versus expectations of 2.5%. Margins expand by 100 basis points. Deal wins have been strong at $4.1 billion. The company goes ahead and ups the full-year revenue guidance to 3 to 4%, while the margin guidance has been retained at 20 to 22%. If you have to find fault, it's on the fact that hiring for the company continues to moderate, and in the current quarter, the total headcount for the company has come down by 1,900 employees. We're going to take your leave. We'll come back with more analysis and news. Stay tuned.